I know it takes a minute. We got a slower than usual connection. Okay, Greg said he can see it. I'm happy. In the interest of saving my voice, here is a disclosure statement. Access to this webinar, blah, blah, blah. And neitherphilstockworld.com, blah, blah, blah. If you would like an audio recording of this disclaimer, call Greg and he'll read it to you. So that's my disclaimer for the day. I'm still healing. I'm not 100% on my voice. It's okay as long as I don't talk for a long period of time, but unfortunately, that's what this webinar is all about. So we are going to, I don't know. I'll try to be more visual and less talking, maybe. Hopefully, I'll see what we can do about it. Anyway, so it's been a couple of weeks since we had a webinar, and I guess we can look over the portfolios today. But we have other business to take care of because we have the oil report that we'd like to take a look at, and we're going to have at 2 o'clock the Fed minutes. So it could be some interesting stuff going on. Let's take a look at where we are. Hang on. Hey, I wonder if I can move the questions to the other screen. Oh, I can. That's interesting. Okay. But first of all, let me do this. Okay, so hopefully you guys can see my Thinkorswim screen. So not the best of days. Hang on, let's see if I can get sized correctly. Delay about 15 seconds. Okay, that's okay, I guess. It's fine as long as I conserve the time. All right, so let's see. Let me put the question box here if I can. I wonder if this will work. All right, we'll see what happens. What was I going to say? Yeah, okay. So basically, surprisingly, the NASDAQ's up pretty good. It's up 20 points. It's coming off its highs. The Russell's up 15 points, back to 1580. But 1580 is where we fell to yesterday. So it's not, sorry, no, it's not right. 1580 is where it fell from yesterday, 1585. So we'll see what happens there. The S&P is still stuck at 2888. And, otherwise we're kind of drifting along. We'll see what sticks. I don't know, are they done? I was really enjoying the Financial Services Committee talking to the banks today. But I'm not sure if it ended. Hang on a second. Drink. Here we go. Luckily, I'm in a hotel room, so everything's in the same place. But the lovely, I don't even know what this thing is. It's a Courtyard Hotel in Amherst, Massachusetts. And doing some marijuana business with New Age Ventures. We're looking to set up a facility in Lee, Massachusetts. We're going to have a greenhouse set up for growing, manufacturing facility, and also a distribution place over there. It's right on the New York border, kind of next to Albany. It's a big space, big project. That's $7.5 million all told. So it'll be very nice if we can pull this together. Anyhow, so let's see. Oil is up at 64.50 again. We had a little dip before. Had a nice drop, $500 thing over there. Gasoline is up at gasoline is up at 206 again, so I'm gonna have to short another one. I was shorting gasoline. I think let's see where we are. Yeah, my average is 205.3, so now we're at 206, so I guess I'm gonna take another one. I was in and out already, that's how I got to 205.3. Let's take a look at oil first. CL. So, this is where we think the top should be in oil, 65 the most. I don't think we're really going to get to 65 based on that oil report we just got. I guess should be able to fill. Okay, 15. Looking for a fill, but I'm going to wait until it stops going up. All right, let's say there. See, I'm the only one though. Oh, I got it. All right. So now my average is 2057. And when you're doing this, when you're averaging into these positions, just always remember to take the profit when you get back to even, and then you've got one at a higher strike. Oh, hang on a second. Sorry. Hey, I'm on a business call. I don't think that wait. Is that too late? Or? Oh, okay. I'm sorry. Don't worry about it. You can skip to it. Yeah, that's okay. Thanks. Yeah. All right. Thank you. They're trying to clean the room, but I'm not going to let them do that now because I'm busy. All right. Anyway, so when you're averaging into these things, you just have to remember that when it goes back to where your strike is, you want to get back to the original amount that you were shorting, which I'm only shorting one contract because I don't have a lot of conviction on gasoline. I just think it's going to be a fun short over the next couple of days. And we'll see how that works out. So Tom says, save your voice. We can follow your future plays without you speaking. Well, I'll minimize it if I can. We'll see. Gasoline, as I said, if it comes oil, if it comes back below the 64.50 line, it's good to short. I mean, we're just following up on what we talked about in the morning. But oh, that's interesting. Why is my profit and loss for the day? I thought I was even before it started. Oh well. Anyway, so when we get back to, well, hopefully I can get rid of this profit and loss on the day thing. But when it comes back down a bit, don't forget why you doubled down. You doubled down to raise your basis. You didn't double down to ride twice as much on the way down, unless that was your goal, was to have that many for short. You have to be careful also. There's very thinly traded contracts. You see only one and one going here. Here you have a more heavier contract trade. But in gasoline, not many people are trading it. That means it's probably you guys following me that are causing the movement right now. And so be careful. It makes it a self-fulfilling prophecy, right? Because everybody keeps shorting. But on the other hand, that can lead a squeeze. Like people see a lot of people piled in on the short side, and they're going to try to squeeze us out now and shoot it higher. So there's no really good way to tell. It's just you got to try. You got to see what's going to happen. A lot of times, though, when they jack up the price without a good reason, and there was a good reason. There was a 7 million barrel draw in gasoline today, which is a very heavy draw. I'm going to take a look at the 1 p.m. report and see how accurate that is. We should do it now before we lose too much money on this thing. And oil, though, oil has a 7 million barrel build. It's a joke that oil's up at all. So my logic was oil shouldn't be up. It's going to go down. It'll drag gasoline a bit lower with it. So far, it's not happening. And we will have to wait and see what's going on. I'm not going to add any more than this stuff. It's really going bad. I'm going to have to reconsider. If oil gets over this line, then I'm going to have to give up on the gas thing. But as you can see, we're 2 standard deviations above where the baseline is on gasoline, and honestly, that report doesn't justify it. I mean, we're not 2, we're more like 3, 4 standard deviations over. That's a huge move, and it's very unlikely to be sustained. So anyway, so when in doubt, check your reports. So we're going to go check out the EIA report. Not that, let's do petroleum. We had a problem last time. Remember that we couldn't get the report? It wasn't petroleum status report. Remember last time it wouldn't show up? Like we kept looking and looking, it wouldn't come in. So we'll see if we do better today. And 1 o'clock. So you always got to check your week. And this says as of April 5th, and today is April 10th, so that makes sense. That's the current report. Let's see if I can make that bigger for you. So let's make sure it squares what we know. Increased by 7 million barrels and gasoline decreased by 7. So now we have to do the autopsy and say, well, what happened? So first of all, the input to refineries remained the same, basically. The utilization was the same. Everything was the same as last week, on the production side, on the refinery activity side. Now, the stocks of oil, as you can see, went up 7 million barrels. Gasoline went down 7 million barrels. Distillates flat. Other oils built up. See, here's another thing. Gasoline went down, but other oils built by 5 million barrels. So that's unreported in that report. So net, you had a 7 million build in oil, a 7 million draw in gasoline, distillates flat, but a 4 million build in other oils. So net, it's a terrible report. But they hit it by creating a lot of alternate products that drew the inventory down more than it would have if they hadn't made a big build in other oils. Gasoline would have built up by 11 million barrels and oil would have crashed. So they shifted their production to try to hide more of the barrels, so you can't tell that they disappeared. All right, so, and that's why you have this net 4 million barrel build here, see, from 78 to 82. Exports is still off the charts. 2.7 million barrels a day are being exported. So we have 2.7 times 7, 18.9. So 19 million barrels a week are being exported out of the country, mostly refined products, but that's what? Gasoline. So there's not an increase in consumption in the U.S. All right. And here's a fun one too. Gasoline, product supplied was 9.368. All other products, see this big gap here? They decrease their supply of other products. The total supply is about the same though. But what matters, if you think about it, is if you look at the supply-demand picture, what matters is your net. We went from 78 to 82. Here we went from 57 last year to 78. So we have 25 million more barrels total supply than we had last year, yet oil is the same, okay, as last year. And last year was, it spiked up last year. Gasoline more expensive than last year. Now we can look at the oil chart and see where we are. No, not you. Oh, there it is. How convenient. All right, hang on. Let me make that big. And we'll see, my voice is getting better. See, maybe I didn't need to talk for a while. I talked plenty yesterday, though. We did a whole thing in a business meeting. But feeling better now. Just a little inconvenience at first. All right, so last year, look what happened in March. Pumped up. April, then we had this big jack up in April, like we're kind of having now. Then we flattened out. Then the run up into the May holiday, as usual, and then crashing back down. And then, of course, you get the July holiday run up, and then you crash back down. And we get then this was the OPEC nonsense again. So, we've had the OPEC thing. That already happened. They've already said they're reiterating their things, and they're going to do this. Oh, the other reason I was gung-ho to short oil today was Russia. And I didn't see this. So it's funny. I heard it. I only just remembered why I'm all gung-ho to short oil. I saw this. Oh, don't ever fly Spirit Airlines. I flew not this trip. What was my trip last week? I flew somewhere. I just came from somewhere else. Oh, Philadelphia. I flew Spirit to Philadelphia. I figured, how bad can it be for a couple of hour flight? Oh my God. It's like you signed up to be tortured. Everything about it sucks. The check-in sucked. The seat sucked. The food was awful. And coming out, it took 45 minutes just to get the bags. It was just every single step of the way. It was the worst airline possible. It was unbelievable. So don't use Spirit. That's my commercial. Where are we? Oil. What was I going to look at? I forgot. Somebody. What was I just looking for before I got distracted? We were talking about oil. We were talking about the chart. Wow. Totally forgot. Russia, thank you. That's why I was sort of off topic. So Russia, OPEC, and Russia said something like they're kind of looking to raise output regardless. Russia. There you go. Because I didn't see any follow up on that this morning, but I remember hearing it last night, and I was like, "Uh-oh, that's bad for oil." And it stuck in my head that I wanted to short oil, and now I remember why. Russia signals it wants to raise output when it meets with OPEC in June. So Russia's push. So in other words, it's going to be very hard for OPEC to have any further cuts if Russia wants to increase supply. Now, it doesn't mean they will increase supply. They could screw you, CNBC. It doesn't mean they will increase supply, but it does mean that that's possible. It's going to be it's going to be hard for them to have any more cutbacks, and they really want to at this June meeting to jack up the prices for the summer. And as it said, the cuts have been part of the 30%. And Libya has supply concerns. That's going to go away eventually. But I love this. Violence in Libya triggers concerns that OPEC members' production and exports could be squeezed. They aren't being squeezed, but, maybe they will be. And they love that. These oil guys love to say, maybe this will hurt supply. Maybe that will hurt supply. Maybe we'll start a war. I think one of the reasons they have constant tension in the Middle East is to keep oil prices high. That's they're basically their business plan to try to keep oil prices high. But yeah, Russia, and certainly when you get close to $70, and Brent is at 70, I imagine by now. Where's Brent? Brent is at $70. So when you get to $70 for Brent, these guys want to take advantage of it because. Look, if you look at the long-term chart, how often do they get to sell oil at 70 plus? All right, so since 2015, oil's only been above 70 for this tiny period of time. So when it's above 70, here's the thing, when it's above 70, do you take advantage of it and start selling oil, or do you cross your fingers and hope for 80? Or do you sit there and keep cutting back until you get to 100? Then you're into game theory, right? Because you're talking about the marginal oil that you'd be selling. It's not the whole oil you're selling. You're still selling oil. But do you sell another 1 million barrels that might keep oil prices still at 70 versus if it gets to 100? And then you have to decide, do I want to collect the extra $70 million a day now? Or do I want to risk not collecting the $70 million a day now and hopefully get prices up? But what happens if you get to here, you don't collect $70 million for 100 days, which is $7 billion. So you don't collect $7 billion over the next 3 months, and then oil prices decline, and not only were you unsuccessful in your attempts, and that's what's happened to them over and over and over again. Not only were you unsuccessful in your in getting $70 billion, but now you're getting less money for everything else and you're in a severe crisis. Whereas if you had the $70 billion, your budget would be secure for the next 6 months. That's these real decisions these people have to make. And, we say $70 billion, you go, oh, $70 billion, who cares? But, normal governments don't have such big economies like we do. $70 billion is a lot to most people. They don't just go 70 billion, so what? What's the big deal? I'm sorry, 7 billion. It does matter. Especially you talk about the Saudis and they distribute their money, and the Russians, and of course Putin wants his oil companies to be up at certain prices. They got to show profits, and they're not going to show profits if they don't sell oil. That's what they're supposed to do as a business. So certain members of OPEC consider this victory, and they're happy to be at 70. They just want to avoid going below 60. That was their game plan, was to stay above 60, not to try to push to the next 100. So we will see what happens, but it's going to be interesting over the summer to see which way things go. So meanwhile, how's gasoline doing? Probably. Whoop. Meanwhile, gasoline's inching higher on us. You know, I'm willing to ride this out though, even if it goes higher. If it does go to 208, I think at 208, since I'm at 206, I might go two more 208. I just don't see any real reason for this other than a report that effectively, because we export 18 million barrels worth of gas, we had a 7 million drop in inventory. You know, that's not really like it's U.S. demand. The reality isn't there, and the oil bill should be very disturbing to people, and it's being ignored. So I have a tolerance for that, but keep in mind, this is these are very expensive contracts, so you can lose a lot of money very, very quickly. So if you know at 208, I'd be down about almost $2,000, and then I'm going to double down and hopefully catch up. All right, but if it goes the other way, then I'll be down $4,000 at 210. So, you know, keep in mind, very expensive stuff. So hopefully it doesn't, though. And so far, we're staying above 64.50. And we'll wait and see. So meanwhile, on the indexes, we'll see how they're doing. RTY. And the NASDAQ. So nothing very exciting going on there. The Russell is making some progress, got back over the 200-day moving average, which is about here. You see how it made a nice pop once it got over there. It went, yay, and it starts taking off. And now we'll see if anything's shortable. But so far, there's nothing very exciting here to do. And we shorted the Dow way up here at 26.3. So we're nowhere near getting back on the Dow. And you know, what's the catalyst? Apple's going up, but not that much. Where's Apple? Oh. Apple is at 199, so just under 200. So Apple's not a catalyst there. Boeing, of course, is down, and it's not recovering in the near future. Way down to 366. I think Boeing, this is another reason I'm still short on the indexes. I think Boeing can easily drop back to 300 if we're a little bit bigger chart of Boeing. You know, where frankly it'll be a screaming buy. But see, we were at 300 in December, and I don't think you're going to get anything out of their report, which is going to be earnings are on the 24th. You know, so I don't think we're going to get anything really out of their report that's going to be positive compared to what we had in, let's see, if we're getting April, 1, 2, 3. So probably here was earnings. And that's what popped them high. It was a great outlook and real high expectations and blah, blah, blah. By the way, they're being sued by shareholders, which always happens when you have something like this. But they're being sued by shareholders for bullshitting here, where they said you knew there were problems. And of course they knew there were problems. That's why those bankers are still testifying. They knew there were problems. That's why they had a software fix. That's why they had a training video saying, here's what you do when the plane starts crashing. You know, it's and it's not the plane starts crashing due to. So we had a conversation about this in chat a couple of days ago. So it's not like they said, this is what you do if the plane starts crashing due to weather or due to this or do that. No, this is what happens when the plane starts crashing due to a design flaw that causes the plane to start crashing. Here's how you fix it. And then there's like, oh, and by the way, the software we designed to fix the design flaw has a flaw that can cause the plane to crash. I mean, it really is ludicrous. And I think the solution, if you call it a solution, if they don't want to, they're not going to redesign the planes. If they redesign the planes, this thing will go to 200. They're not going to redesign the planes. What they're going to do is they're going to have to install more sensors. And they've only delivered about 300 of the 737s out of like 10,000 that are being delivered long term. So they're going to have to, for all the new planes, they're going to have to take back the planes that they have out there, which are grounded anyway right now. And they're going to have to install, the software fix theoretically is a good fix, but the problem is it can have a false reading. So what they need is like a more redundant sensor system so that they don't get false positives, and also an easier override switch to allow the pilots to take control of the plane back and deal with it themselves rather than the software. Because what they did is the plane has a tendency to, because the engines are moved to the front of the plane, planes have a tendency to nose up. So in other words, when the jet's thrust, they have a tendency to push the plane's nose up. The software then corrects the plane and pushes it down 2 degrees at a time to level it off. But if there's a failure in the sensor, the software program goes into a loop that constantly adjusts the plane down and down and down 2 degrees, 2 degrees, 2 degrees, 2 degrees until it crashes. And the pilots, if they don't disengage the software and override the autopilot, which is usually on, we cannot beat the plane. The plane is faster than the pilots, and it will beat them. It'll nose down faster than they can correct. And that's what caused those 2 crashes, basically. Somebody in chat, we were talking about it, and he's an engineer, and he was saying, like, look, you make software fixes all the time to overcome design flaws, but not, in my attitude anyways, not in a life and death situation. And this is a serious mistake Boeing made, and it's not a mistake, by the way. This is a problem Boeing has. It's because it isn't like they built the plane and produced the plane and then found this out. They knew at some point during production and testing, at some point they realized that this was a problem. Why is my phone recording my voice? What the frick? Did I say something? My phone, I just happen to look at my phone, and it's recording every word I said. It's transcribing what I'm saying, which I didn't even know it could do that. And I don't know what turned that on. I must have said something that sounds like a "Hey Siri," but that's weird. Oh, now, yep. See, I said "Hey Siri" that time. It came right on again. Stop it. Stop it, phone. That was really weird. Anyway, I looked at my phone, and everything I was saying was coming out of the phone on the screen, was being written. Where was I? Oh, yeah. So there's going to be an investigation. There are going to be lawsuits. And again, I don't know anything for sure. My logic and my experience as a corporate consultant is, having a pretty good understanding of the workings of these companies, is that what happened is, at some point, Boeing became aware of this design flaw. They decided, rather than redesign the plane, that they would then move ahead with a software fix to change for the plane to stop people from dying, obviously. But the point is that with lives at stake, that's sort of choosing profits over safety. That they should have taken a hit. Cut production for 3 months, or moved everything 3 months back and said, we're sorry, like a lot of plane manufacturers do. They say, we have a production delay. They don't have to say why. They say we have a production delay, and now the plane's going to be scheduled for this release. And frankly, it wouldn't have even hurt them that badly. But the other problem is, though, that the 737 is being sold based on Brian says BA designed your phone software as well. Yeah, I think somebody was decided to like listen in on my conversation there for some reason. But the point is that somewhere somebody decided the selling point of 737 MAX was the fuel efficiency, 15% fuel efficiency. Most of that fuel efficiency is coming from the moving of the engines, from the redesign of the engines. They move the engines from the wing to kind of like towards the nose. And that apparently helps a lot, plus the composite materials and everything else. But there's a certain large amount of the fuel efficiency is coming from the new design of the engines. So they basically decided, well, if we do that, it wasn't just about let's wait 3 months. It wasn't fixable. And again, this is my impression, that it wasn't fixable and still have the same selling potential, and therefore it would have hurt them down the road. It wouldn't be simply not 3 months. It's that, ooh, we can't actually do what we said we could do, which is design a plane with 15% fuel savings. And that could have shoved people into Airbus and said, well, if you can't do that, then what the hell am I buying you for? And I could buy Airbus for less money. Because the Airbuses were cheaper. Airbuses went cheaper and bigger capacity, and Boeing went less capacity, cheap, better fuel efficiency, and that struck it. It was the right combination that got people to place tons of orders. But if they did it based on a lie, on something that doesn't actually work, then there's all kinds of potential for lawsuits. I mean, the people who got the planes could sue them. The investors can sue them who bought into this conference call here and said, oh, you guys said everything was great and blah, 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 and didn't say anything about a problem. So I bought Boeing stock here and here and here, and it went down to here, and it's all your fault. That's effectively what the investor lawsuit is. And of course, the people who died, their families have a good reason to sue. When you get on a defective plane, you aren't warned that this plane is somehow defective. So there'll be a pretty good investigation and a lot of stuff, and I think that there's going to be a lot of negatives to Boeing. I think they got a lot of headwinds. I certainly wouldn't bet them bullish. They're scary stock to short. Now, ultimately, they've still got orders for 10,000 planes at, I don't know, 100 million, whatever it is. They got not 10 billion, probably 100 billion, whatever the hell the number is. They got a lot of orders. So they have a lot of orders of planes. And they will be selling planes for the next 10 years in massive quantities. And maybe it'll be interrupted for 6 months or whatever. But they're going to go back and they're going to do what they have to do, and they'll start selling planes again. Because it's not like you really have a choice. There's no capacity in China to make that many planes, and plus nobody trusts a Chinese company. We're talking about Boeing. It's relatively open here what's wrong with the Boeing plane. You have no idea what's going on in China and Russian planes and Brazilian planes. And of course, it's I'm not saying they're all bad, but reputation-wise, generally Boeing gets it right and has for 50 years. So it's going to be hard for people to switch. I mean, think of the risk an airline is taking by switching from Boeing to Aeroflot or Boeing to whatever Chinese company makes planes, or Embraer, Brazil. Just switching to those companies. If it goes badly there, then you're really screwed as a buyer of planes. So I don't think that's a likely scenario to play out. I think people are going to basically stick with Boeing. It'll recover over time. And over time, they're going to make a ton of money. And just like BP, when they had the oil spill and it was like a total disaster and they had to clean up, they clean it up and eventually it goes back. Eventually, it goes back. You pay your fine, you deal with the fallout, and you move on. But we're not there yet. We haven't had that kind of sell-off yet. All we are now is back to where we were before it popped. Okay, I think this is a more likely scenario. I think at some point we're going to get down to 300, and then then it's time to start nosing in the Boeing. But not quite yet. They're not there yet. What else? Okay. Jared says, hi Phil, coffee is at the bottom. How about a Joe play? Let's see what Joe looks like. I thought, oh no, I think they went back to Joe. At some point they had a different coffee ETF, and now they seem to be back to Joe. I don't know. It's very, I don't play them since then. Like, I really annoyed at that. But yeah, coffee has really crashed out. And I thought we set up a Joe play not too long ago. I swear we did. But what you want to do is let's compare this chart to actual coffee. Let's see if we can get it. So monthly, we'll do weekly. All right, so here's, okay, what you want to watch, if you want to know if the ETF is true to the underlying, right? 125 to 100 is 25%. 50 to 35 is more than 25% down, right? Is well, let's be fair, it's not 50. It's really 48 to 38 is 10. Well, 10 no, actually 10 out of 48 is fair. That's about 25% there too. Then it went back up from let's say 37.50 to 47, so that's almost a third of that. Here we went from 100 to 125, that's 25%. So there might be some exaggeration, but not so much that you would say this is a bad ETF. It's tracking coffee very, very closely. So that means it's not a terrible ETF to invest in. You're not getting a huge decay. You're coming pretty close to where the product is. And that means it's investable for long term. So step one, to what Jared says, is that it's not a bad thing to play. He's saying sell the September 35 puts and buy the 30-40 spread, and it nets $1 for the $10 spread. He says, let's see. So I think this is a good idea, actually. I mean, I swear we did a coffee play. I'm a little bit confused. Now, is September long enough is one question. Well, you can't go longer than September, so it better be long enough. So what he's saying is we sell the 35 puts, even though coffee's at 34, that's a very reasonable target. You're going to collect about $3 for the 35 puts, 285, 320, right? So if you sell 5 of those, let's say, and collect $3,000, and then he's saying if we pick up the 30-40 spread, so we've got let's say $5 here, and the 40s are a bit over $1. So that's basically a $4 spread. So yeah, he's right. You net $1 on a $10 spread. So if you sell one 135 put for 3, for each spread that's 4, you're paying net $1 with coffee at 33 or 34 really. So you're $4 in the money. And even if it gets assigned to you at 35, you would only lose $1 on the put. But if it's at 34, you would lose $1 on the put, and you would make $4 on here. So your net would be $3. So you'd have your break even's down around $32.50 because you would owe $2.50 to the $5 put, and you get $2.50 back. Well, that's not your break even. You need to make $1. So your break even's about $33.50 or $33.50, somewhere in that range is your break even. So yeah, that's a good play. Good idea. That's a good idea by Jared as far as that goes for a coffee play. Rich says, I think you said you wouldn't use Joe again. We haven't had success with it. Well, I think I mean, look, I'm sorry. I didn't know coffee would get this low. Let's put it that way. I think it's a good play. Coffee is ridiculously cheap right now. We haven't had any kind of event in the weather that's caused coffee to have a shortage, that's ruined the crops anywhere or something like that. But I think we will. And I think there'll be a spot shortages in coffee, and I think it'll pop back up. Anyway, I mean, you can't never say never. It's like you never had success with Joe. It's like saying it's like saying I play roulette all the time, and number 27 never came in for me. So I'm never going to play 27. It's really as likely as anything else to pay off. It's just a question of your timing. So we've had poor timing on Joe in the past. I believe when they changed the ETF, they liquidated the old ETF, did something else. It was BNO for a while. I think they fixed the flaw in it that caused it to decay too fast, and that's another reason where I think I might like it better now. But anyway, I'm just saying it was. I'm just saying that Garrett had an idea, and I thought it was a good one. He has an idea to trade it that way. I think it's an excellent play. John says, if the May gasoline contract is 2065 and the June contract is 2025, should we sell the front month contract and buy the back month, thinking they'll converge towards the current spot price? So in other words, what he's saying is that the June contract is 202. Forget the fives. So the June contract is 202. So you go long on the June contract, but short on the May contract. I think the flaw in the logic there is that the June contract has no holidays, whereas the May contract has, I'm going to say Labor Day. I always get those mixed up. But the June contract has Labor Day or Memorial Day, whatever day it is in May. I'm pretty sure it's Labor Day. So there's and the contracts expire at the end of the month. So probably, very likely, at the end of May, gasoline will be high, and then in June there's no catalyst until you get to the July 4th weekend. So it'll be a real nail biter whether or not it recovers into the July 4th weekend. So I understand the logic you're talking about on the trade, but you really have to take into account what's going on during that month, because that's probably why you have this discrepancy where people will pay more for May when you need that holiday gasoline than they will for June when there's not a particular catalyst. And I imagine July probably pops again on contract pricing because July 4th people need the gasoline again. Speaking of which, how we do it? Active trader. Oh, I don't know because I took it away. Ugh, still ugly. Okay, but coming back a bit. All right. Let's see. Oh, no, didn't mean to do that. There we go. All right. And John also says, and the front month will depreciate as the contract moves forward. No, it's not really. It's not like an option contract. There's not a time premium in it. It's going to be what it'll be as far as the supply-demand picture as of that week. Yeah, right at the last week, people do need to get out, and that can put some downward pressure on it. But again, with a holiday at the end of the month in May, you may actually spike into the May weekend. It's hard to say what the demand picture is going to look like for the driving season. We're looking for oranges. What happened to them? I don't know. I don't follow oranges, but that's interesting. And coffee, by the way, in the futures is KCN. KCN 19 is what we play the July contract. And that's at 96.55. And generally, we buy the contract at 95. In fact, we just did. We bought it at 95. We sold it at 97. It didn't get back to 95 yet, so we're kind of waiting. That's where we are with coffee. In the longer-term picture, it's really cheap. So if you pick a position, you want to stick with it. I like that. I still like that Joe play. But futures-wise, I'd rather see it actually test 95 again if I want to get back in it. Oh. Damn it, always hitting the wrong button. Okay. Let's see. Oh, you're welcome, John. All right, so where are we? All right, now the testimony seems to have ended. Steve Mnuchin says, I expect a strong year for the U.S. economy. Boy, they are talking up the market every chance they get. Wow. I mean, I've never seen politicians, except for like when we had the big crash in 2008, man, boy, did they steer people wrong, right? They were constantly talking up the market and telling people to get back in. It was a correction. They'd fix it and blah, blah, blah. And we went lower and lower and lower and lower. We're not there. Now we're going higher and higher. And these guys still every day feel the need to get out there and try to tell you how you should be buying stocks. It's weird. It really is. It doesn't make me comfortable at all what's going on here. All right. That's that. Let's see if there's any exciting news before we go back to the portfolios, check it out. Oh, no, they are still testifying. Boy, is this confusing. Oh, Mnuchin says Keynes should be confirmed to the Fed as well. Boy, they're all over the place. It was very scary, Trump packing the Fed with like guys that he's wants to do business with. All right, hang on a second. I gotta get some. Okay, where were we? News, right? Okay, let's check the news and see if anything exciting is happening. Yes, I use an ad blocker. All right, Facebook tools, mainstay, ConAgra, 7%. Wow. That's... Wow. Not a small company. It's a big move. Discovery in YouTube, aluminum and copper. So Deutsche Bank says aluminum, copper, and gold. Well, I do like Barrick a lot, I gotta tell you. And of course, silver, wheat, and precious metals now. Accenture, any DocuSign. DocuSign's a good. I mean, the service is fantastic. It's a good company. I like them. I think they're going to basically be the real standard. More and more when you do real estate stuff, you'll see DocuSign. They're really good. U.S. corporate income tax halved in 2. Wow, look at that. U.S. corporations paid 7% of their profits as taxes in 2018, down from 13.6%. I say this all the time, and everybody says I'm crazy. 7%. Can you imagine? They were paying 13%. That was too much, and they had to cut it. The lowest since 1947. Wow. Revenue from corporate taxes total 194 billion. Understand that we have a 3.6 trillion dollars, $3,600 billion budget, and corporations who make more money than individuals in this country overall, they paid 200 billion, and we, the people, paid the rest. That is really sick. And of course, and half of what we pay is Social Security and whatever. It's not even technically income taxes. We pay, people pay a huge chunk of money. Just forget it. This is a ruination of this country, allowing this to happen. And they've created a situation in which you feel it's unpatriotic to criticize this. It's like, what are you, a socialist? That's the new thing now. Anytime he's freaking at the banker meeting. I heard him say socialist like 10 times already. Every Republican rep that comes up to say something, he's like, oh, we don't want to have any socialism here. Let's be careful where you guys go with this meeting. I mean, it's just sick. But that's what they do. I mean, they want to change the conversation away from this. So they make it like you can't even ask the question about why corporations make this much money because that makes you a socialist. And socialists are evil, blah, blah, blah. It's perverted thinking. It really is. The whole point of taxation is to redistribute income. That's what taxes do. So why am I still paying my income tax if we're going to have this? Why should I pay more than 7% in taxes if corporations are paying 7%? Where's the logic to that? If it's not right for corporations to pay taxes, why can't I go trickle down on people too? But more to the point, corporations, since we do need money to run the country, corporations should pay the same as people, not ridiculously less, not 1/5. I mean, I'm sorry, I'm disgusted. Wow. I mean, 7%. We have a $21 trillion deficit, and they have to pay 7% of their profit. And don't forget, that's their profit after all the deductions that they get. Not, that's not their gross profits. That's their profit after they depreciate and deduct and take expenses and blah, blah, blah. It's bullshit. It's the biggest piece of bullshit in the history of economies. We're just destroying this country in order to enrich these corporations. And yeah, sure, we're investors and it's good for the market and blah, 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 but it's not good for the country. We're destroying the country in order to have these short-term gains in the market. And they can't last because where are you going to go from 7%? Now they're going to have to actually make money. So all these gains in corporate income from, what corporate net income, when you see the gains in corporate net income, which was only a few percent over last year, is because they had a 6.6% increase from taxes. They didn't make more money. They just paid less taxes. So how are they going to do that again? We cut it to zero? And even if we cut it to zero, what are they going to do for that after that? We're going to start having to pay them? We're going to subsidize them now? This is freaking insane. And what a joke. We cut tax rate from 21 to 35 and they pay 7. They were only paying 13 anyway. No one ever paid 21. And companies do, of course, but the overall situation is just, don't get me started. I'm already started, forget it. All right. Lockheed F-35 grounded. Oh, God. Again. Speaking of defective planes, right? That's been going on for how many years? UK GDP, 0.2%, one of the biggest economies in the world, not growing at all. Sprint is still going on with this T-Mobile thing. Jeez. I think this is getting a bit okay. I'm usually not a fan of monopolies, but this is a monopoly. You've got two gigantic companies competing against them, and the two small ones want to get together and make a viable competitor. It doesn't make any sense. Why would you not allow this? Why are we playing with this thing here? They both need to survive. That's the trick. If one of them goes bankrupt, the other one will go bankrupt, and then there'll be nothing, and then you'll have two companies. You're better off having a third viable competitor than tell the two competitors that are struggling that they can't merge. Morgan Stanley to be a top shareholder and everything else I already read in chat. So there's nothing really changing since we started the webinar. Oh, 2 o'clock is the Fed minutes. Oh, right now. Damn it. Always being sidetracked by something, right? FOMC minutes. Dun, 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 dun. Where is it? About the FOMC. Come on, man. Meeting calendars and information. Maybe. Here we go. Okay. So, statement minutes. That's what we're waiting for here. So March 20th was the meeting, and we're waiting for the minutes of that meeting. And at the moment, the markets are ticking up a little bit. See how my RBs are doing. All right, Fed minutes. Hang on a second. Let's get the, let Steve Leeson tell me what happened. Oh, come on.
For the rest of the year. Several participants say the target range is close to the long-run neutral level, and several participants noting their view on the right target range could shift in either direction.
I don't know if you guys can hear, but
those expecting better growth see the economy could warrant a rate hike later this year.
Ooh.
The majority says we're leaving unchanged, but
some say we could have a rate hike. Wow.
There's no comment from any group I would note explicitly saying they expect to have to cut interest rates. A couple underscore that patience that we're using or going through a patient regime should not limit policy moves when appropriate. Moving along
Let's
here.
Take a look. What is that?
1 second.
Oh, that's the projections.
Saying the time is needed to assess if the weakness in the first quarter spills over into the second
Where are the
quarter.
minutes?
And there's uncertainty around trade, around Brexit, around spillovers from weakness in
This
Europe
is annoying.
and China. Participants generally expected slower growth due to that foreign growth problem, waning effects of fiscal stimulus, and less boost in fiscal policy than they originally
View on target rate may shift in either direction.
For the rest of the year, but continued softness in the housing sector was a concern. Most likely the outcome, they said, sustained expansion, strong labor market, and inflation at trend. But several were concerned about the low level of the yield curve, which was not quite.
They're concerned about the yield curve, which got worse since that meeting.
The low level of term premium. And finally, concerns about increasing debt issuance at high levels of corporate debt said this is warranted monitoring.
They're concerned about debt. Not sure how they're going to help that.
As we bring in a panel, Bob Pisani for the New York Stock Exchange, Steve Cassett.
All right, so this is nothing. Nothing happened. Here we go. All right, here are the minutes. It's very tedious to go through. Oh no. Okay, forget it. We'll find some highlights shortly. I can't deal with that right now. It's too much reading. All right. Anyway, I don't think this is having much effect. I don't think they said anything that really changes anybody's opinion. So we're going to see where we are. Oh, 28.90 on the S&P though. That's back to where we shorted it very successfully, wasn't it? We didn't get to 3,000. Oh, we did. We got to 20. Nope, sorry, I'm wrong. We got to 2,900, so we can't short anything right now. Ooh, gasoline coming down a little bit. Oh, that's good. All right, we'll just have to see what the chatter is on the Fed minutes. Let's go back to the questions for a minute. Any play on X? It looks like a channel bottom. I'm not sure. I haven't been good on this deal. I like Mittal, which hasn't gone anywhere. MT. And they're sort of drifting along at the bottom, but I do like them because I just think that the Europe and China will work out their stuff better than we will. We have beneficial tariffs in place now for U.S. steel, and they're kind of sucking. And I know it's the bottom of a channel. I know it's a very long-term channel, but I'm not a big fan of their business, honestly. Where's my thing? Here they are. Hang on a second. We'll try this again. U.S. Steel. Okay, so this is Stockopedia. All right, so right now you're paying $3 billion for U.S. Steel at this price. Keep that in mind. that look, they lost 1.6 billion, they made 100 million. They lost 1.6 billion, they lost 440 million. They made 300 million, or let's call it 400, and they made $1 billion last year, and now they're going to be down around $500 million or so. So, okay, for 3 billion, that's not terrible if they're going to keep making 500 million, but they have the capacity to lose quite a lot of money. And as you can see, we're at 14. We're right in between on sales. They really haven't increased or anything like that. They carry a lot of debt. Rates are rising. That's and it's marginal earnings. Let's see if it says on the balance sheet what the debt is. That's not so bad. I mean, the long-term total debt is 9. Man, I get to 9 billion there. Long-term debt, long-term debt, total debt. I don't know. I don't see how they get 9 out of that. Oh, I see these liabilities up here too. Account payable, blah blah blah. Okay, so debt's like only about $6 billion. That's not awful, you know, and they're not. It's even at 5%, they're only paying 300. Well, at 5%, they're paying 300 million a year, let's say. I just, you know, I'm not really impressed with. Well, okay, in fact, actually, the best way to do this is let's compare to Mattel. That's a better way to look at it. So compared to Mattel, which is $22 billion and has $75 billion in sales ish and makes, you know, they had losses too, but they've really come out of it and they're plowing in the cash. And like US Steel, they're going to be weaker going forward. Everybody sees all these guys as being weaker going forward. They're kind of peaking out now. And if this is US Steel peaking out, I'm not that excited. Mattel at least is going to make $3 billion going forward against a $22 billion market cap. So I'm still paying 7 times earnings, but it's a way bigger company with, you know, and you don't have this wacky thing with China and the US and the trade war and blah, blah, blah. So, you know, honestly, they're both kind of low in the channel, and I really just think it's a little safer to go with Mattel if I'm going to go buying a steel company, though I don't, not strongly, you know, jumping into either one. I think we do have Mattel in one of our portfolios, but I don't think it's a major play. You know, you could play it, but if I was going to play US Steel, I guess I would sell the puts. Oh, look, coming down nicely. Okay, come on, keep going. I think the Fed is not as dovish as people thought, and they're getting a little bit worried right now. I think that's what's happening. I think they're weaker. I was going to say X. So if you want to look at US Steel, so they're at 17, and you can sell the $13 puts for almost $2. You know, 185. I'd go 190 probably. That'll net you in for like 11. I think that's, if I was gonna play him, that would be the basis of my play, is to do that. But I don't know. I'm not a big fan of US Steel. They can turn ugly so fast. And you have a real danger because steel in the US, we're at a real disadvantage. We have to ship anything we're not using in the US and infrastructure. I would love it if I thought we were really going to do something about infrastructure, but we're not this year and not next year. You have to get a Democratic president in the office before we're going to do something about infrastructure. And then they're going to have a Democratic Congress too to make it work. I just don't see there any huge demand. There's not a big amount of industrial building going on that requires steel, commercial properties and things like that. And you know, and for U.S. Steel to ship to other countries, aside from tariff issues, you got the cost of the shipping, which steel's ridiculously heavy, makes it tough to ship, and we're at a huge disadvantage in that regard. So and they're really kept alive through tariffs and subsidies. I don't think that's really the way I want to go with a company to bet on it. Anyway, so that's what I think about U.S. Steel. And John says, Republican. I don't know why you get cut off, John. He says the Republicans don't care. They're about to propose abolishing, but I don't know what they're abolishing, but they're proposing to abolish all sorts of things. Those scams. All right. Mnuchin backs Powell. How what? He doesn't believe Powell is the wrong person to lead the Fed. Oh, I see. So he picked him. So Uber seeks a $100 billion valuation. Wowee. And they want to raise $10 billion. And do we have any facts about them? No, but as far as I know, they're losing about $1 billion or $2 billion a year. So for the privilege of losing a couple of $1 billion a year, you can buy Uber for $100 billion and watch your money disappear. It's almost as fast as Ford. Ooh, Ford is recalling the F-150s. Why? What'd they do wrong now? A fire risk from splicing on the engine block hiatus. Wow. That's interesting. All right. Anyway, so let's see where we are with our portfolio. That's a good idea. All right, so let's do that. Move this guy over here. Bigging up the screen. And we'll take a quick stroll through the portfolios. So basically, so to recap, there was nothing it wasn't dovish enough. The Fed minutes weren't really that dovish or weren't more dovish, and therefore, again, we're at the top. It's hard to go higher than the top without anything good happening. There's nothing particularly great in that Fed report. So the indexes are all selling off a little bit now. We'll see how far the slide goes. If I was going to short something, it would be the NASDAQ at 70, especially if it crosses under 7,600. And or the Russell right here, if it's with a stop over 1580, but you can short it here and then hopefully it goes under that red line and then that becomes your stop, which is 1578, whatever. So right about here, right about 1579. See, it's over now. And of course, we like our gasoline short. Gold's back up at 1311. KC, and oil 64.57 still. Natural gas was up nicely and came back down a bit, and now gasoline's going higher again. Bastards. All right, so all this will take time to play out, but I think we're going to weaken here because I don't see anything that bullish about what's going on. Nothing urgent though as far as playing. So meanwhile, portfolio-wise, where is? Let's just look for references. See where we were at the last review. Oh. No. You can always find the latest reviews. Just go to the virtual portfolio tab and see what we're doing. So here's the March review. That's our most recent. Obviously, it was only 10 days ago. And let's see how we did. So now the review is 10 days ago, but it's important that we the actual is a summary review. 2/14 was the date that we looked at the options opportunity portfolio. At the time, a month ago basically. At the time, we were at 283, 465, and now we'll check out where we are today. Here's the options opportunity portfolio, and we're at 303, so 283, so $20,000. I fixed Hovnanian. That was broken. We now have only 400 shares of the new Hovnanian. We had 10,000 of the old. We did 25 to 1 to 25 reverse split. So these are our stocks. None of them are covered. They're all pretty low. We've got our TZA hedge here. We've got short puts at a loose on the LB. Dave & Buster's is play, and Sigma is and this one. And then we've got these full spreads. We have Apple, very nice. Alaska Airlines doing well. AXL about even, so good for any trade really. Bed Bath & Beyond, who's going to have earnings tonight. How are we too bullish? I don't know. We have the 15, 22.50 spread. We're low in the spread right now. We sold the $15 puts. We only sold 5 puts. We have 25 longs. I feel fine about that one. I'm good on that. Now, this spread, we paid 12 minus 6 minus 2 is 12 minus 8, so call it $4,000. We paid net $4,000 for the spread. Now the net is 16 minus 10 is 6. Now it's like 62.50. So if you bought it right now at 62.50, the spread at 22.50 pays up. Can't do that math. Pays 750 times 25. 750 times 25. So if we nail it, it's $18,000. So even if you went into the spread now for 6,200, it pays 18,000. So you have a triple if all goes well. No. I think I wouldn't jump into it now. I think if earnings are bad, I think it's a good trade, and you'll get it much cheaper. You'll get back to our price. If earnings are good, probably construct a different trade. But I do like them a lot, though. I think they're way underpriced. BHC is used to be Vertex. They're doing fine. They're way over. They're oh no, actually they're not. We go up to 30, so we'll wait and see what happens there. Citibank doing wow. They really blasted up, huh? They're doing really well. We're up a lot on that one. Coeur d'Alene's a minor. I like them. I think they're too cheap. Chesapeake doing well, but could do much better. Freeport. Where are we? What happened? Oh yeah. Freeport hasn't really moved yet. That's good for a new trade. That's copper, by the way. That's copper and gold. So two of the things that Goldman just recommended, or whoever it was recommended, are right there in this trade. This is aggressive. We have 25 of the 10s. We only sold 20 of the 17 covers, and we have 15 of the puts at 12. Those are in the money. So this is a great trade. I like this one a lot. It's basically the same price as we started with. The net right now is 11 minus 3 is 8 minus. Oh wait, that's not minus. These puts are wrong. This entry is incorrect. We sold these puts. We didn't buy these puts. I had to fix that. So sorry about that. So it's doing better than I thought. So we bought these puts. So forget that. Those numbers are wrong. FNSR, we like them. And now for semi, they're not doing too good. So I think that's a nice little bet there. So FNSR is still good for a new trade, very reasonable target. GNC struggling still. I mean, I wouldn't call it a waste of space in the portfolio. It kind of feels like a waste of space, but I really think people, again, these turnaround stories, a retailer with a turnaround story takes ages to play out, and people are just so impatient. I think we gotta wait for earnings there. Gold is Barrick, and they're doing okay. They're in pretty good shape, and I expect them to do great. HBI is Hanesbrand. They came back, and they're doing nicely. Kraft Heinz still in the dumps. I like them for a long-term trade. Limited Brand, basically Also still good for a new trade, but boy, they're annoying. But in this case, this is interesting. Listen, notice they're at 27. Is that right? Why does it say 0-0? Oh, I guess they're flat for the day. They're at 27, and this is a 20-27.50 bull call spread. Very straightforward. 20-27.50 bull call spread. Sold the 27.50 put. So basically, we're saying if they stay flat till 2021, we're going to make 750 times 15. Again, with math, I can't do too much things. So 750 times 15, we're going to get $11,250. How much is this spread right now? It's 13 minus 11 is 2,500. So it's a $2,500 spread that'll pay you back 11,000 something dollars. So very, it's a really good for a new trade. It's a great trade. And all you're doing is seeing, that's just for the stock to stay flat. All we're saying is it's not going to go lower. MJ is a marijuana ETF. Holy crap. 32,000 gained on the call side. We're very bullish because we have the $20 calls. We have 40 of those. We only sold 20 covers, and we sold 10 of the puts. So very aggressive here. 63 minus. Wow, look how cheap this was when we started. It was a $15,000 spread when we started, and now it's worth 60 minus 20 is 43 minus 5 is 38. So it went from $15,000 to $38,000 already. At full price, I can do this math. It's going to be $40,000 at full price. At 30, but we also have room to run above 30. But I think probably push comes to shove, I might look at this thing, and we may end up just taking the profit off the table on this one, and doing something else that's a different spread, because there's no sense in keeping all that money on the table if we can pull it off. So hang on, let's see what's going on here. Take a look at them. So watch for this one on the review. See, they were up near 40. And I think this thing is going to be at 70 plus, maybe 100 in a couple of years. So in no way am I saying get out of it. That's why we're setting up a marijuana hedge fund. By the way, we're looking, even if it's not you, we're looking for lead investors in the marijuana hedge fund. We're looking for people with $5 to $20 million who want to come in and be lead investors and be part of the management company, not just to put money in the fund, but to help build a management company with us. And if you are someone like that, or you know someone like that, let us know. Just contact Greg at philstockworld.com, and we'll get the ball rolling on that, because that's something that's going to be huge. Because this whole industry, it's insane how much money is in it. I'm like I said, I'm out in Massachusetts now doing expansion for our California marijuana company that PSW Investments owns 25% of, and it is unbelievable. First of all, there's tons of people who want to give us $7 million to build a facility. That's number one. It's partners. Number two, we literally can make millions of dollars per month once we get this thing up and running. There's only one marijuana dispensary. There's only about 5 dispensaries in the state right now. We found a friendly town that wants to have us in there, and blah blah blah. So the dispensary that's closest to us would be the one that's here in Amherst in Northampton. We're about 45 minutes away from where that dispensary, our dispensary would be 45 minutes away, and close to Albany is the key. If New York doesn't get their shit together, it'll be a great place for people from New York to come and get stuff. And even if New York does put it in, we'll still be there in Massachusetts, and we'll have a really good local access for people coming down the thruway. So anybody coming up and down the New York State Thruway, if we build a good place, will come. Not to mention, we're also going to do all of our East Coast CBD processing is going to be there too. So, what was I going to say? Yeah. So there's tons of companies like us in there that are going to grow like crazy. The money to be made in this business is astounding. And some of these companies are going to end up making more than 10 times what they are. This company has a dozen to 20 companies, maybe, marijuana companies. They're all generally about 10% of the portfolio in size. So let's say, probably 12 companies that are roughly 10% of the portfolio each. And if any two of them blow up and double and triple in size, then the whole portfolio is going to go crazy. They don't all have to be successful, just some of them have to be successful, and they'll scale up really quickly. So I really like these guys for the long term. They're going to spike up and down based on news and events and so on and so forth. But as a long-term investment, I love it. And like I said, we have the $20 calls. They're way down here. We don't need to be in the $20 calls because these are probably 202 120s. Where are they? Wow, look how low they are. So we have these calls that we could sell for $16.50. Okay? And if we collect $16.50 on these calls, we can then pick up instead let's say we get the 30s for like $10, and we sell the, I don't even think I'd do that. I don't like that pricing. I think I'd buy the, we'll assume it's going to be a big pop, so we could pick up. All right, let's say the 37s for $7. They're a little bit out of the money, and we pick up the 37s for $7, and we sell the 50s for $3 something. So our net is $4 on the $13 spread, and we sold these guys for $16.50. So we could buy twice as many of those. And when I say net 3, 37, $7, and the 40 and the 50s are $3. So $6.50 minus 3 is $3.50. Okay, so for $3.50, so for 7 of our $16, we still put 9 in our pocket. So for 7 of our $16, we double our exposure above 37. And now we have 80, or maybe we'll do 100 or whatever. So instead of 40, we'll have 100 that make money from 37 to 50. Because we had 40 that made money from 20 to 30. That's our original bet. Whoops. Oh yeah. Our original bet was from 12/27 of 18. Our bet was that we'd go from 20 to 30, and that bet made us $20,000. All right, and where were we on 228? We were you see, that's when we picked it up nicely. We picked it up on the low right here. So when they were down here, we did the same thing. We picked a little bit in the money, and we bet they'd go back to 30, and they blasted past 30. We had some uncovered, so we're making a huge amount of money. Now we can take, how much did we spend? We spent net, see, it's the same spread basically. See, 760, 370. We spent the same, in this case it's like $4, but we spent the same $354 on that spread. Now again, keep in mind, it's now $16.50. So we're going to take 9 off the table. We're going to double up on this and have 80 longs instead. Before we had 40 longs. And now we're going to have 80 longs for the next $13. And it's not just free. We're taking off $9 off the table, which is a $6 profit. So we're up 200%, and we're setting up to make twice as much money on the next leg up. And that's how you play these things. You've got to take advantage of these moves. When you get a big pop in a crazy thing, you take it off the table. So we can't possibly lose. We're basically taking a triple off the table, or double. We're taking a double off the table at least. and we are still leaving enough in play that we can make a fortune. And then if it gets up to 50, we'll go cash. We'll do the same thing. We'll make another bet from 50 to 60 to 70. And that's how on this one trade we can go from 15,000. The next stage would be, like I said, we'll do 100 on a $10, $15 spread. That'd be 150,000. So think about the math of this. We go from 15,000 to the next stage. We can make 150,000, and the stage after that, we'll be able to make $500,000. All starting with a $15,000 bet that we roll, and meanwhile, along the way, pocketing half the gains that we make. So that's how you work these trades, and that's how come we have such outrageous returns in these portfolios, because when we do get a nice play like this, we know how to take advantage of it and lock it in. And I'm pretty sure it's not even our first time playing NJ. I think we played NJ earlier, but we already took that off the table. Here's Micron, another one I very much like for the long term. Still low in the range, so good for a new trade. Northern Dynasty, a bit of an underperformer. I think we added to this one. I'm not sure if we did, but it's not reflected yet. Annaly Capital's a dividend play, so you don't see your gains here, but they drop money to the bottom line. OIH is finally coming back a bit. We think that's going to be good for a very big run. SunPower already paid off huge. It's already above our play, so have a look at that one whether we want to keep it. SQQ's a hedge. We pressed this hedge. We've doubled down on our hedges, I think. It's not reflected here yet. Walgreen Boots. Wow. We did it, and again, we did an adjustment here. It's not reflected yet. I love these guys, and just last week, I think we did an adjustment on them. I think they're way, way too low at 55, but they're staying there. They're not moving, but they got whacked. They got whacked because their margins are being squeezed on prescription drugs, and you think they're all prescription drugs, but they're not. But it is still obviously the large part of their sales. But they, it's like a grocery store when you go into Walgreens. It's not really all prescription drugs, but that's obviously a place they make a lot of money. But their actual total sales of prescription drugs went up, and to me, that's a positive indicator, because it just means more customers coming in the door who end up leaving with groceries and things like that they pick up along the way. And I think what you're going to see from Walgreens, you're going to see a little bit more emphasis on food and things like that they do there, and also they're probably going to rearrange the store so that there's more of that on the way, because right now they're still set up more like a drugstore, and I think they want to probably shoot themselves more for like items you want to purchase. So in other words, save your trip to the grocery store. They don't do milk right now, things like that. I think that's something they're going to get into. I think they should get into like some basic groceries, things that you get at a 7-Eleven. There should be more of that at Walgreens. But anyway, the customer base is there. The base revenues are there. They're just having trouble with the prescription drugs, so I like them, sticking with them for the long term. And my precious, Wheaton Precious Metals. Love these guys. This is like the third, fourth time we played them. Also moving along quite nicely. 23, blah, blah, blah. Let's see. I think they pulled back a bit, but I keep accidentally hitting that. Very sensitive. Let's see. WPF. These guys are look how much they fell. They're very much a channel play. They were at 25. They come back a bit, but they're just adjusting. Look at this run they've been having. Still on a very bullish pattern going up. Uh-oh, my voice is going. They're still on a bullish pattern going up, and I just think this is going to be the action: up, down, up, down, up, down, up, down. But they'll keep going up and up. So I love these guys. Garrett says, the short-term calls we sold, should we replace them? I'm not sure which ones you mean. What did we sell? We sold 22. No, not those. Oh, we sold the June 20 calls. No. We were worried they would come down, but we're not going to replace them. We're just going to roll them along as it gets closer to June. So these burned us a bit, but we have 30 longs, and so we're completely covered because we have the 15 calls. There's no danger to us because even with these, we only have 25 covers against 30 longs. So we're just going to roll these along, and they're going to keep a tight coverage because it's such a crazy stock that it could go up and down quite a lot on us. So we just want to make sure that we don't get back to that $20 line, or if it does, we're not going to care. And that's where we are with that. We're not worried about major fluctuations in the market. And what I do worry about is a very strong dollar knocking the price down on these guys. All right. I'm going to wrap this up shortly because my voice is going and I don't want to stress it out. So options opportunity portfolio, chugging along nicely. It's a self-contained portfolio with the hedges included. Where was the reviews? Oh, yeah. So that was this one. The next one we had was the butterfly portfolio, which was at 151. And we haven't really touched that. Let's see how that's doing. And it's at 164. So, 13. I mean, I know we're all spoiled, but $13,000 in a month for portfolio that we don't touch is good, okay? Especially when that's really 13% of the whole portfolio. I mean, things are going quite well, and we're really well hedged here. I mean, everybody's got covers. We're not overplaying anything. We only have 5 short Disney calls, and we're at that mark now. Disney's about to have earnings, or they're or no, not earnings. They're having the analyst day tomorrow. They're going to be probably making big projections with big numbers, but we don't really care because we have 15 longs here. We only have 5 shorts here. So we'll be happy to roll these along. We're also very happy to add more longs to Disney because it's a fantastic position. Mondelez is moving right along. They're fine. They're right in our range. OIH, we're aggressive on. We're behind at the moment, but I think that's going to take off. And Whirlpool is just chugging along right where it should be. So everything's, it's a good portfolio. The butterfly portfolio is a very, very, very consistent 20 to 40% a year is generally what you're going to get out of this. But what I love about it, it's really hard to lose money in the butterfly portfolio. So it's to be more conservative, it's my favorite portfolio. We don't gamble a lot in this portfolio. We do gamble. Like OIH went super low on the channel, and we said, screw that, we're just going to go long. We don't ignore an opportunity, but generally it's not what we're looking for. We're mostly just sell premium, sell premium, sell premium. And you can see in a month like this, picking up $13,000 from just these 5 positions, because Apple, Disney. It's 5 positions. And we have $74,000 as cash. And we're only using $220 in margin. So we figure on 164,000, we have 320. So we're using 220 in margin. So about 2/3 of our margin is being used up. It's a fantastic portfolio. Plenty of cash on the side, ready to ride things out. We don't even have any hedges in this portfolio. We just allow the positions to be their own hedges in this thing. Where are we now? Okay, butterfly, blah, 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 blah. Money Talk. Okay, so money. Now, speaking of things we don't touch, I'm going to be on the show on Money Talk on April 24th. And I'm like the hero of Canada with this thing. We've done this show, this is when we do live on the air for Bloomberg in Canada for their Money Talk show. So our next big adjustment day is going to be April 24th. We can't touch it other than when we're on the show because that's the only time we make adjustments. Well, that's not true. We did take off something. I forgot what it was, but something. Oh, GE, because we didn't like what was happening to GE, and we called a thing. But I emailed, I tweeted, I put up the thing, I sent an alert, I did everything I could possibly do to make sure everybody knew about it. But that was a very rare occasion. Everything else we've adjusted on the show 100% at that time. But that doesn't mean, again, I thought about it. I'm like, just because we haven't been adjusting when it isn't the show day, doesn't mean we sit there like idiots and let something go bad on us. So I just did everything I could to alert all the BNN people that we made that change, and they forwarded it out to all the people who signed up. So I can't do more than that, really. Where are we? So 167. Holy crap! I mean, wow. It was at 137. So we gained 30% in a month without. And here we haven't changed a thing. This is just the same exact positions, no changes, 30% a month. You know, you guys, this is how you know the market's going to crash. Of course it's going to crash. It can't keep paying you 30% a month. I don't care what kind of genius stock picker you are. If you're making 30% a month, something is wrong. Okay, it's not supposed to happen. It's like if you're playing roulette and you bet black and it comes up 20 times in a row. You gotta think something's wrong with the wheel. It's not because you're such a freaking genius, because every time you pick something, it comes up. That's just not how it works. That's not how statistics works. That's not how logic works. There's no sitting here and saying I'm so great. I made 30% a month on a portfolio without touching it. There's something just wrong. Now, notice these positions are generally the same exact positions in the OOP. We just have less of them. I'm actually more selective here because we can't change them. I'm more selective with the positions, and also there's self-hedging. We got the hedges right in the portfolio. But because we can't change them, it's the same ticks as the OOP, except much more selective, because I take anything I even think might have a problem from quarter to quarter. Because I'm only on the show once a quarter. If I have any inkling that could be a problem, I don't put it in. So Caterpillar, General Mills, General Food, whatever they're called, Barrick Gold again, IBM Stock of the Year, Trade of the Year, LB, again, obviously MJ, all the ones I bang the table on, Micron and Wheaton Precious Metals. These are all the ones that everybody who listens to me in chat knows I talk about them over and over and over again, because every time I think somebody's not in it, I'm like, why are you not in these stocks? That's what this portfolio is. How could you not be in these stocks? But still, ridiculous gains just shouldn't happen. There's something broken in the market when you make this kind of money. It's not sustainable. I mean, there isn't enough money in the world to give people 30% a month. It's just not there. And it's terrifying when you think about the billionaires who are making their 30% a month on some of the $3 billion made it, having those kind of positions made $1 billion last month. That's sick. Short-term portfolio, that was 741, 198. How much did we lose is a question here. Those are our hedges. So we went from 741 to 712. So we lost about $30,000 in the short-term portfolio, which we're supposed to do. The question is, how much did we make in the long-term portfolio? The short-term portfolio is full of our hedges, where we, in the long-term portfolio, are protecting. So in the long-term portfolio, we were at 1249, and now we're at ooh, that's a big number, 175%. 1249. Wow, 1378. So that's 130,000. So what do we say we lost in the short-term portfolio? 20, 30,000 in the short-term portfolio, made 130 in the long-term portfolio. That is exactly what's supposed to happen. Okay, and so our net $100,000 gain in the long-term, short-term combination portfolio, now we want to take another 25,000 out, a quarter of what we made on paper, We want to take it out and put it into more hedges in the short-term portfolio. So every time we make a couple of steps forward, we take a step back, take some of that money, put it into the hedges to lock it in, because we don't know when this is all going to fall apart. But believe me, at this kind of rate of return, it's all going to fall apart. It can't keep happening. We were up 149%. Now we're up 175%. So that's 25% more in the long-term portfolio in a month. And that's a lot of positions. This is a very diversified group. 49 spreads. So 50-something positions in this portfolio, not even counting the 20 puts. And as a group, made 25%. That's just completely insane. Should not happen. All right, so you don't look a gift horse in the mouth. You take a portion of the money you made on paper, and either you're going to cash it out, and if you don't want to cash it out, then you take 25 to 33% of your money and you put it into the hedges. And if you don't do that, you're being irresponsible with your trading. You really are. You know, and look at it and see if it's hot. Oh, well, broke up. I mean, so yeah, and you have to go through the portfolios. We're going to do it again next week, going through all our portfolio positions where, oh shit, look at Apple. We were super aggressive on Apple. We have no cover, and we're up. Holy shit, we're up $179,000 on that one position. So definitely we're going to cover Apple. There's no question about it, because that's crazy. Even if they go up, it's like it's enough money. We made enough money. Let's take some profits. We'll find something else to play. And again, it's the same logic as I forgot what it was now on the marijuana ETF. It's the same logic as the MJ ETF. We made a lot of money. Let's take this off the table. If Apple's going to go to 220, 230, God bless it. And I do think it will, but God bless it. But you know what? I'll take the 200, 230 spread for $10 instead of having $82 tied up in these guys. I can take $70 off the table and still have a big upside on Apple. I don't need to risk this much money. It's silly. There's no benefit to the 120 calls. And we just did this in our hedge fund, too. We had the same position in the hedge fund. We just did the same thing. In the hedge fund, it was like $500,000. And it was like, whoa, that's way too much money. It's silly. So, you have to take the cash off the table at some point. Otherwise, what are you doing? It can't just always be on paper profit. You have to start converting. So do we have a big? I hope we have a big IPM position here too. Oh yeah, we do. Not huge, but a good IPM position. I'm upset we never put it in the options opportunity portfolio, but I think we were tight for money here. Here, look, our MJ position here isn't doing too good. Not as good anyway. So I have to work on that one as well and put some more cash into it. Anyway, so things are good. They're so good we need to hedge more, and we'll see how it goes. All right, that's our plan. All right, guys, so let's see. One more look at gasoline, see if we're doing okay. Not helping at all. Oh, glad I missed that, though. That would have upset me. It went up and back down. All right, so it seems like we're going to kind of drift along here, and we'll see what happens for the rest of the week. And then next week we start, Friday is serious earnings. Friday is a bank earnings, and we're going to see what happens. And other than that, though, we'll just have to see. We'll do full reviews of the portfolios all next week. That's my plan. All right. Thanks, everybody, for coming. And I will we'll definitely do another webinar next week for sure. Right. Have a good day, everybody.